Welcome to the first Wrexham Property TV of the year, and we have a great episode for you. I hope you enjoy it. The general theme of Wrexham Property TV for January 2024 is a very quick review of 2023 and some ideas in terms of how things are going to go in 2024 with regards to property matters. The sales market in Wrexham was predicted in 2023 to cool off very quickly after a very busy 2022. I think the reality was the market on the sales side still stayed buoyant, particularly here in Wrexham, up until about August, beginning of September. After that period, there was a cool-off period, but it wasn't anything as dramatic as some of the more pessimistic forecasts were. Residential prices in Wrexham seem to be holding up far better than they are in both Chester and Shrewsbury. I would say in 2023 there was, towards the end of the year, a dilution in prices maybe of between 4 and 6%. To the best of my ability and knowledge, I would say 2024 is going to be very much on the sales market as steady as she goes. Anything up to £300,000 is moving quite quickly in terms of sales, but the more expensive property, 500,000 above, I think is moving somewhat slower than you would expect that property to move. Vendors in selling those kind of properties will have to be a bit more patient. There are currently offers of mortgage rates which are coming down in prices, and that will certainly help the market and possibly speed up that higher sector, that premium sector of the market as well. Wrexham officially was the place in the UK that had the highest average number of inquiries per rental property. 56 people who were interested in every lettings property that came onto the market. Now, the newspapers covered it as being the McElhenney Reynolds factor again. Absolutely wrong, I'm afraid, on this occasion. What has happened is post-pandemic, when the residential sales market became incredibly buoyant, a huge number of Wrexham landlords decided to sell at the top of the market. And as a result, a lot of lettings property was taken off the market completely. I estimate it to be as big as between 30 and 40%, but demand was still high. Inevitably then, prices began to rise and rise and rise. On average, a 40% increase in property rental prices from what they were pre-pandemic to what they are today. I think with all the publicity around Wrexham as being a very where there's a very high demand for rental property, I'm hoping that will bring far more landlords and investors back into the market, which would undoubtedly benefit would-be tenants. But overall, going into 2024, I think the rental market in the town has peaked in terms of price, but there's a desperate demand for more rental property to come on the market.
So the last time I was here was December 2021, so we were just going into January 22, of course. And I said then that I didn't expect interest rates to shoot up. How wrong was I? In fact, the day I was here was the first day interest rates went from 0.1% to 0.25. And today we still sat at 5.75. So they went up certainly more than I was expecting, much quicker than I was expecting. 2022 was a year full of events. Markets then was really in some turmoil because of the cost of fuel, oil, gas prices shooting up. Clearly the start of inflation skyrocketing actually resulted in the end of that year that the US market was down 19%. The FTSE 250, which is effectively UK PLC, was also down around 19%. The European market was down 14%, and the Asian markets were just more volatile than they've ever seen. When stock markets went down, you would expect to see fixed interest rate markets increase because they work like scales. But for the first time in 100 years, stock markets come down, fixed interest actually went down further. So couple that with inflation, normally what you would see when stock markets are volatile in that sense, that people will move their money from shares and equities into fixed interests. Well, because they'd gone down further, there was actually nowhere to move your money. So effectively, people had to just sit tight and ride out the storm. 2023, markets rallied, and this is quite normal. If you look throughout history, when you see a sharp decline in stock markets, you tend to see quite a sharp recovery. This year, do I expect markets to continue the same? Probably not. I think we're going to see quite a bit of volatility this year, predominantly driven by elections. Just touching on interest rates, the Federal Reserve are looking at, and as are the ECB, which is the European Central Bank, are looking at starting to make interest rate reductions already. I'd expect that to be a steady flight path down. I don't expect some sharp reductions. The Bank of England, though, have been quite direct in what they've said about reducing interest rates. They don't expect to reduce interest rates anytime soon. Their biggest fear for a spike in inflation, even though it's come down quite a bit from where the double digits that we saw around sort of 12, 18 months ago, they're worried that the national living wage that's due to increase in March, April time this year is going to cause a spike again in inflation, so undo some of their good work that they feel that they've done. So effectively what they're looking at doing is keeping interest rates at around the 5.75 for the foreseeable future. But then what they do plan to do, all being well, is seeing sharper reductions. So where we may see the US come down quite gently, what we would expect to see with the Bank of England is something a bit more sharp when they decide to reduce them. But the really important thing is to have a diverse portfolio that you're happy with the level of risk that you're taking.
Today I've been invited to Nightingale Hospice, one of the most iconic charitable organisations in Wrexham. It's a great opportunity for me to try and give an insight to you of what goes on here and actually try and show you what an inspirational place it is. Sarah, you've been involved with Nightingale House for quite a few years. How did you get started?
Well, my first experience from Nightingale House was actually when the hospice first opened back in 1995. My mum was a volunteer hairdresser here, so it meant a great deal to me when I first started working here over 4 years ago now.
So this is our hydrotherapy pool. Our physio team use it to help with patients' pain management.
All of our nurses and the clinical team go above and beyond to make our patients feel as welcome as possible, making those lasting moments of whatever part of the journey that they're in as special as they can.
So this room has got a family room,
The families are more than welcome to stay.
Okay. It's a very inspirational place, and dare I say, it's a very happy place.
Yes,
It's a very
absolutely.
it's a very positive place.
It is, yeah. And I think there's a lot of people don't realise that they can actually self-refer to the hospice. If they've had a life-limiting diagnosis themselves or a family member, all they need to do is just pick up the phone.
So how does a wonderful place like this get funded?
Well, it's very much the community, corporate supporters, grants and trusts that keep our doors open. The running costs for this year are just under 5 million, with just a small percentage coming from statutory funding. So, you know, without our wonderful supporters, it just wouldn't be possible for us to run our services.
I think Nightingale House has also been quite innovative in terms of the way it's generated some income. You've got obviously some retail outlets, but possibly the better known of all the income generation schemes is Cafe Cwtch.
Well, the cafe became part of the hospice nearly 8 years ago now. It's open to the public. We've got a real sort of community following now. It's become a real hub, as well as, you know, being a meeting point. It has delicious food and cakes.
I can vouch for that.
Yeah.
Yes.
And it's lovely to sort of have that barrier that we can sort of break down and welcoming people to Nightingale House.
Sarah, thank you very much indeed.
Thank you, Vaughan.
So I thought we'd start today with an overview of 2023 as we're in the start of 2024, just to have a little look backwards before we can see the more positive picture maybe for 2024. As an overview, 2023 was quite turbulent in terms of rates. The raising of the Bank of England rate did cause a lot of concern both in the general public and the banking industry, so they raised their rates accordingly. However, things have settled since that, both with economic policy, domestic and abroad, although we still have the ongoing issues with Russia and Ukraine, which do affect our economy. They have stabilised over the latter part of the year. One of the biggest impacts to lending during 2023 was the stress rate that sat behind our buy-to-let portfolios. So we were really struggling to move buy-to-let mortgages at the beginning of 2023. As the year has gone on, lenders have reduced that down, and now we're seeing quite substantial reductions in both interest rates on the charge rate and the stress rate, which is great news for landlords, because a lot of them thought that they were property locked and they couldn't move anywhere and were thinking of selling their properties. They don't need to do that. So anybody who's thinking about that now needs to revisit that decision and speak to a mortgage advisor like myself. Moving on to 2024, we have seen some really positive press, and I'm seeing rates changing constantly. We actually this week broke the 4% barrier and went down onto 3.94 with a lender. As we speak, that rate may change because they are inundated because it's lower. However, there is currently a rate war with all of our lenders. So as one drops, the other will follow because it gives the other lenders the confidence. So as I've probably mentioned in previous pieces, it's not just about what the Bank of England rate are doing with their rates that affects rates that are put out there by the lenders. It's also service. Lenders are very much driven by the Net Promoter Score. So if a lender is inundated with applications, even if they've got the funding in the background to continue that lend, they will draw the rate because they can't continue the service levels. And it has such a reputational impact, they will actually draw the rate early. But as they draw their rate, another lender will jump in to take their position. So at the minute, they're all jostling for position. One of the key things and one of the key advantages of having a financial advisor is that we are aware of those rate changes all of the time. So if it's on average, it takes for a house purchase 4 months for a mortgage to complete. During that 4-month period, the rate could drop by 0.75%. That's a big impact on your monthly payment. And as an advisor, we're on it and we're changing it and we're updating it in the background, and you don't have to do anything. So overall, a much more positive picture at the moment for 2024. So a great time to look at your finances, have a little look at your mortgage, see when it's due. A lot of mortgages are due for remortgage in 2024, huge numbers. Round springtime actually is where the expected highest numbers. So have a little look and see when that's due. and make sure you contact somebody like myself.